like you're making the argument like this isn't just hospitality or movie theaters. This could be kind of across industries, depending where you are and what your balance sheet looks like. There could be disappearances.
You're bringing up some really good examples. So let's follow those examples. Let's trace route those, right? This is a key word, trace route. Fucking follow the trail of breadcrumbs. This is now the time where honestly, like the propensity to action should be avoided at all costs. Like this is where you sit down, you tape your hands to your hips, your lap, you don't touch the fucking keyboard, and you just learn and you study. You know, you're not supposed to be day trading in moments like this. You're supposed to be learning. But let's take your examples. So, you know, the major movie studios were forced essentially to go day and date. Now, the problem with that is that you can't put that genie back in the bottle. And the other problem with it is that they may have gotten the pricing wrong. They have no time. They had no time to really do a pricing elasticity and release these movies for $100 a ticket on iTunes. They released them for $20. And so it's going to be very difficult for Disney and, you know, Universal and Warner Brothers and Sony Pictures to all of a sudden come back and say, we're going to try to give the movie theaters back their window of exclusivity. I think that's basically very difficult, if not impossible. And then the second thing that's going to happen is that they're not going to have the same pricing power that they would have had with the online distributors. Now, all of that has one really important implication, which is the cost of the movies that they make are going to change. And then as a result, the cost of what they're willing to pay is going to change. As a result, the cost of what they pay their unionized employees is going to change. What the CGI maker, you know, charges changes. What the caterer charges changes. And so this is why when you have these big sort of cataclysmic economic events, what you have is a period that's very deflationary, right? You have a period where prices fall and fall and fall. Now, in the Great Depression, the only way that we could buck that trend is to basically get rid of the gold standard, you know, in 33, I think it was. And so we're going to have some version of that, which is to basically create a bottom on pricing and to create a bottom on price stability. So the movie theaters more than likely go BK. And in that, if you were a REIT or if you were a tenant or if you owned the land, you're going to have to figure out how to repurpose that, how to try to pay your debt obligations. Otherwise, you're going to go bankrupt or you're going to go default or you're just going to hand the keys over to those facilities to banks, at which point, you know, probably the beneficiary is Amazon or some other sort of like physical retail that needs last mile distribution. And some of these movie theaters represent the right size and the right physical location. Okay, so that's one. Then you talked about startups. That's another great example. You know, for a long time, I think in 2015 or 16, I started to become very bearish on enterprise software. And the reason was because we shifted much more towards SMB than we did towards mid-market and enterprise. And the reason was because the money cycle was faster. It was, you could put small amounts of dollars to work. The companies would sell online via credit card to other SMBs who would buy very quickly. You would show revenue traction. And then you were able to use that to then go and raise an up round. So venture capitalists loved it. The entrepreneurs loved it. They used it to attract employees because the equity looked like it was accreting very quickly. But then you realize how brittle your customer base is in a moment like this because they are the first to stop paying. They are the first to not honor their contracts. They're the first to go out of business, unfortunately, because they don't have the cash cushion. And so there's going to be, unfortunately, a lot of carnage in the SMB space that there won't be in the enterprise space. So now go back to a company like Workday or, you know, ServiceNow or SAP or some young startups that have explicitly chosen to sell into the Global 1000. Netscope is one, as an example, that sells security software into the Global 1000. They consumed enormous amounts of capital to build their go-to-market. But in many ways, that capital becomes a protective moat that will keep them safe in a moment like this because their customers have a higher probability of staying in business. Now, their business may slow down, their business may get re-rated, but their business isn't going out of business. But if you were selling mostly to SMBs, there's a very good chance that 50% of your revenue is impaired. And at that point, again, if you're already money losing, which most of these startups were, selling to SMBs at price points that didn't make sense because you were trying to get out of a J curve, it's going to be next to impossible. The other strategy that startups also employed was being monoproduct, right? It was not only go to SMBs, charge something small, if anything at all, but do it for one single point solution, create a wedge, and then expand. Well, again, you go back to this problem that when companies are rebuilding their expense base, what they're doing is making decisions about what costs to bear. The company that has a monoproduct solution is last in line to be considered because it doesn't solve enough of the CEO, CFO, CIO's problems. So then all of a sudden you start to make substandard decisions, meaning you'll take Microsoft because it's a whole stack of things. It's one person, it's one sale, they can now discount, and you have this increasing returns of scale property that benefits Microsoft disproportionately, right? So you have to be very unique. You have to be a Zoom or a Slack or Okta in that environment to be able to defend yourself adequately. So that's also a very problematic dynamic. A monoproduct company is going to be very challenged. A SMB-focused go-to-market sales strategy is very challenged. So to your point, like the examples of contraction, I think are numerous. The examples of green shoots exist, but they're harder to find. And to be quite honest, they're speculative because they're not about adoption. They're now more about valuation. Like everybody loves Zoom, everybody loves Slack. It's fabulous. You have to be able to right-size valuation in moments like this as well.